Welcome back. We have India Cement's results up for you on the screen. At the bottom of your screen, the standalone net loss is coming at around 111 crores, and that's primarily on account of an exceptional loss of about 100 odd crores. Just for that, looks like the bottom line is in line with what the street was working with, and revenue is coming at around that 1151 crores, a tad bit below our expectations of around 1280 odd crores. It will be important to see how the company's performed on the EBITDA front as well. But from what I can see, the finance costs actually have increased year on year and quarter on quarter. 92 crores. This compares with around 80 crores quarter ago and 82 crores the same quarter a year ago. Nigel, if you have access to the numbers, any early details that you can find?
No, Mangal, I'm just actually trying to pull up, the results. I've not yet got the release. At least on the BSE, it's not yet been uploaded. So I'll just come back to you in just a bit. But going by the numbers that you were talking about, finance cost high, we'll just have to check out if there is a one-off in there or there is, there is some kind of forex as well that could be part of it. So we'll keep an eye on that front.
All right, Nigel. So we'll let you pour over the numbers. Meanwhile, let's take it straight to Manisha. Then she joins us with a roundup of all the action in the currency and commodity space. This time around, she's focusing on gold. Manisha.
Well, yes, thank you for that, Mangalam and Nigel. I really hope you bought that gold that we've been discussing so many times on air, because it's trading at a record highs now, and we have seen 24% of gains in gold prices in this year, and this is over and above 25% of gains that we saw in the previous year as well. It's trading at an 8-year highs in the international markets as well, so it has been going quite well for gold, playing true to its attributes that it is a safe haven buying, especially when everything else is slightly jittery. But Chirag Mehta of Quantum now joins us to discuss that further. Chirag, hi. With the lockdown on, with everything shut, we've seen online digital gold and gold on the electronic platform actually do quite well. So while the global gold ETFs have seen the best of buying in the last 7 or 8 years, how have been the trends for the Indian markets? All right, we'll try and get Chirag back. But as I was saying, we've seen great gains coming in for the gold there in sense of prices and in sense of ETF buying as well. The international markets have seen the best of holdings, not just for gold, but for silver as well, where the AUM shows at a record highs. So precious metals clearly doing quite well there. In the Indian markets as well, with the kind of numbers that we are working with, it has been net inflows in the month of April to the tune of 730 crores. In the month of May, we've seen 800 crores of inflow come in for the gold ETFs there. So buying has been quite well there. If you look at the kind of concerns that the global markets are dealing with right now, there is a second wave of COVID-19 that we are dealing with. The massive stimulus measures, the weakness in US dollar are some of the factors which actually have been supportive for gold. But we have Chirag back with us now. Chirag, what's your sense in gold ETF buying in the Indian markets?
Yeah, we are seeing strong flows, Manisha, in gold ETFs in India. So far, until May, we had received inflows of more than 3,000 crores. And even this month is shaping up well. We are seeing strong flows for gold ETFs. Even the increase in prices is not leading to a slowdown in demand. So we are seeing robust flows coming in for gold ETFs, given the uncertainty that we are seeing at the economy level, although stock markets are reflecting more optimism. But people, given that after each crisis, we see an urge to allocate more to gold, so as we are seeing it this time as well. So we're looking at strong flows. Year to date has been really strong, in line with what we have seen in global markets. Global gold ETFs flows or the investment demand has remained strong, and also in India we are seeing a similar trend shape up.
Chirag, I'm assuming you would be doing a lot of calculations and studies, etc. So when you look at large cap funds, multi-cap funds, or liquid funds, gold ETFs, what kind of returns have you been able to study? What has gold given in relative to other funds and ETFs?
Yeah, so this year has been significantly better for gold as compared to any other asset class. Gold has outperformed most other asset class on a year-to-date or a one-year basis. Even in the long-term trends, if you see, the long-term returns from gold have been very, very comparable to most other asset classes. It stayed somewhere between what fixed income has delivered and little lesser than what equities have delivered, commensurating with the risk in each of the asset classes. So there is kind of a misconception that gold doesn't deliver returns, but gold has delivered returns over a long period as well. And even this year, given the uncertainty, it has stayed to its characteristics, true to its characteristics, saying that given uncertainty and stressful times, gold tends to help portfolios, and so it has done this time as well. In the depths of crisis, we are seeing other asset classes declined significantly, and gold was one thing that was holding well and then started generating returns. So I think that really highlights the importance of gold in one's portfolio, and I think investors are learning that fact and have been looking at gold from an allocation perspective, not from just chasing returns perspective. So that is the change that we are seeing, and therefore the flows that we are seeing in gold are going to be more stronger, more robust, and won't run away with even if we see some downsides in gold. It's an allocation call that investors are having this time rather than looking at it from a return perspective.
Chirag, I also want to know on what kind of participation have you been seeing until now? Because I know there is still a whole host of people who haven't started, allocating monies or including gold in their portfolios. I mean, I was talking to some funds in Singapore and UK, and they say they do see a change because from medical professionals to lawyers to students to a lot of professionals have started to come in and buy gold, own gold in physical and ETF form. Do you see that change still coming in India? All right, looks like we've lost Chirag yet again. But, there have been interesting studies done on how newer and newer, sense of participants is now coming into the gold there. There have been studies on how professionals, students, etc. also are trying to make their portfolios into gold, own gold in the physical terms as well, and buy it in ETFs, sovereign gold funds, which is doing quite well in India, where we've seen the last 4 or 5 months actually give you a very strong returns. And the expectation is that going forward from here, the gold prices will continue to give proper returns in the this year and the next as well, is the popular view that really seems to be coming across. So while we are trading around 48,400 today, which is a record high in case of gold, the expectation is that we are not too far away from 50,000 being touched in this year itself, and there are targets of 55,000 now coming in for the next year as well. Nigel.
Manisha, you're getting us into trouble at home. My wife is hearing you out, and it's going to be a bit of a hit to me. But as you said, you're seeing more upside for gold, so we'll stay tuned to that. And you have been telling us that, in fact, this is the asset that could outperform. And so far, Manisha, you have hit the nail on the head. All right, then let's get back to the markets then. Quick word on India Cements, Mangalam, since, we were just discussing that. On the top line, there's a miss of around 120 crores in comparison to what we were working with. We were working with a number in excess of around 1,270 crores odd. It's coming at around 1,150 crores odd. So yes, we know that volumes are expected to be weak. We don't have the exact number out here, but the miss on the top line has trickled down further to the margins, and that's why the margins in single digits at around 5.9%. I've not seen these sort of margins coming in from India Cements ever. Valuation wise, yes, the stock is attractive, and that's why you don't see the stock falling much, even on poor numbers. And the other big trigger is that big investor, Mr. Damani, has got nearly around 20% stake in the company. What's the outlook from there? And the third factor will be the technical factor, that now, in fact, it's not in the F&O market.
Right.
So, that's why, in fact, you may not see a very, very sharp dip on the stock, but the numbers are disappointing for sure, Mangalam.
All right, that's about India Cements. Just keep an eye out on the Nifty back at the 10,500 mark, and that's primarily on account of Reliance, which is pulling its weight. Currently at the high point of the day, a big recovery is what we're seeing on Reliance. Now has close to around 13% weight on the index. So that recovery on the Nifty has been led purely by Reliance, up by almost about 1.5% off lows from the morning, leading the Nifty above that 10,500 mark. But as we slip into a short break, just wanted to tell our viewers that there is a special offer on Money Control Pro. Remember, this is your trusted guide in uncertain times. Get faster access, curated markets data, actionable investment ideas, and much more with Money Control Pro. Join the Pro family for just ₹1 per day. Subscribe now. Use the coupon code PRO365.